Hi, Brian Pyle with HomeSafe here with another tip, another solution to help you with your retirement. Today we're talking about retirement and retirement savings. Now we all know we should have been saving for retirement from day one, right? From the day we turned 18, we're supposed to put in $50, $100, $200 a month. And if you had done that all these years, you would have ended up in retirement with a tidy sum, and you'd probably be pretty well set for retirement. But the reality is, actually very few of us did that. It's understandable, you're busy buying homes, raising kids. We all thought, well, we'd get around to that next month. Now, the trouble is, you may be facing retirement immediately, or you're on the doorstep of retirement and you don't have quite enough saved for retirement. Well, hard, cold facts are you're not alone. And the fact is, almost all of us don't have enough saved for retirement. Here is a safe and secure strategy on how you can radically catch up on your retirement account. We call it retirement stuffing. I'll show you exactly how it works. We're going to draw an example here. In this example, let's say we have a client who has a home worth $600,000. They've got a $200,000 mortgage balance. Their house payment is $1,200 per month, and they've got about $100,000 saved for retirement. Now, obviously, $100,000 is not enough for retirement, and this client knows it as well. They have no other pensions. They have no pensions or other investments. They're 62 years old. They'd like to retire in the next 3 to 5 years, and they're not currently saving any money. Now, they've got enough money for all their day-to-day bills. They're just not putting any savings away to build their retirement account. And now, at 62 years old, they're on the doorstep of retirement. They may work another 3 to 5 years, but they just don't have enough saved here. So this is a strategy to help them radically increase their savings account and better position them for retirement. Stick with us. Okay, our strategy, some of you may have guessed it, is to take out a reverse mortgage before retirement. You're going to find that in this example, the reverse mortgage is going to dramatically better position this client for retirement. I'll show you exactly how. First thing, the reverse mortgage is going to eliminate that $1,200 mortgage payment. The next thing is, after paying off their mortgage, covering all the fees, the reverse mortgage is going to kick off or release $154,000 in tax-free money. Tax-free money, by the way, is going to spend a lot further than the taxable IRA. Next, instead of paying that $1,200 mortgage payment each and every month, we're going to divert that payment into savings for the next 3 years. Current cash flow is unchanged. The important thing here is, by eliminating that mortgage payment, now this couple or client can effortlessly put that money into savings without changing their current lifestyle one bit. That's the important key here. Sure, this client knows they should have been saving more money. They just never either weren't able to do it or just never had the discipline. Now, with having eliminated the mortgage payment, it makes it nice and easy for them. Let's see what results we're going to have and how much better position they're going to be from the track that they were previously on. So, first let's see what track they were on, and that was without the reverse. So, you remember from our example, they previously had $100,000 in savings, and let's assume that retirement account was growing at 5%. Well, 3 years later, that 100 grew up to 116,000. They still have a mortgage payment. If they didn't do our plan, they still have the mortgage payment. Now, they're in retirement just 3 years later, and because they still have a mortgage payment and realize they don't have very much money saved, now they're tempted to take Social Security early before they reach full benefits. And you can easily see how one financial mistake leads to another financial mistake. Folks, you need to make sure that you get your full benefit from Social Security. Please wait until you get your full benefits. Don't take the 10 to 15% haircut just to get it early. It's not worth it. I should say that in most cases it's not worth it. Now they risk the financial trouble with lack of savings, and they run the real risk of running out of their retirement savings before they're finished with their retirement. Let's look at the better approach, utilizing the reverse mortgage to radically stuff their retirement account and build that up quickly in just a few short years. Now, their retirement savings, previously they had the 100 that they started with on their own. They also got the 154,000 tax-free from the reverse, and remember, they diverted their mortgage payment for 3 years into their savings account. Wow, what a difference. They now have 3 times more money in their retirement account than they had or would have had if they kept up with their old strategy. Now, they also don't have a mortgage payment, so they're far better positioned with 3 times more money, and in fact, now they don't even need, they have less of a need for the money because they've reduced their expenses. Because they've reduced their expenses, now they're no longer tempted to take their Social Security early. So one good financial move leads to another good financial move. Now they can afford to wait and make sure they reach full benefits for Social Security before they begin to receive them. I think it's clear this client is far better prepared and positioned for retirement. It's safe and guaranteed. They can live in that home as long as they want until the last one of them ceases to live in there and they do not owe a monthly mortgage payment. I hope this has helped. I hope this scenario gives you an idea that if you haven't saved enough for retirement, there's hope for you. The secret is you want to get started as quick as possible. This is only a 3-year scenario. This would be dramatically better if we ran it for 5 years. No matter your case or scenario, talk to us. I'd love to find out what's important to you about retirement, where you're at, and how we might be able to help you. Thanks for listening.